My name is Michael Guyot, publisher of the Lead Lag Report. Joining me for the hour is Chris Giancarlo. Chris, again, I appreciate that we can finally get this going here. But for those who are not familiar with your background, introduce yourself. Who are you? What's your background? What have you done throughout your career? And are you really a crypto dad?
I am, Michael. I am a crypto dad. I've got 3 kids that are all crypto aficionados. But I actually don't own crypto. That was a decision I made as chairman of the CFTC when we were working on crypto, not to be an owner. And since I left the agency at the end of my term in 2019, since I'm still outspoken on the subject, I don't want anybody to question my motivation. And so I've made a conscious decision not to own Bitcoin or other crypto, as much as I'm excited about the technology and someday may change that portfolio choice. But it's really one driven by, hopefully, people listen to what I say without thinking that somehow I have an ulterior motive. By way of background, I'm a lawyer by training. I graduated Vanderbilt Law School in 1984 and took up work on Wall Street representing corporate clients, mostly technology-based firms. And in 1989, I moved to the UK and was representing a lot of emerging technology companies coming out of research centers around Oxford and Cambridge and elsewhere in Europe that were coming to the United States to sell goods and services, but more to access U.S. capital markets and help companies raise private equity and go public. And in 2000, I decided to put my hand to it myself. I teamed up with a group of entrepreneurs and we built up a company called GFI Group. Actually on Wall Street, I was there to head up development. We raised 3 rounds of private equity and eventually took the company public. We built one of the world's largest trading platforms for trading a type of what was then a novel financial instrument called an over-the-counter swap. By 2008, we had emerged as the world's largest trading platform for a type of swap called the credit default swap, and found ourselves in the middle of the financial crisis. Now, we were not a trading firm, but we operated the platforms of which large banks and other intermediaries traded these instruments. And so we had a pretty good idea of how the market worked. And when Congress took up the Dodd-Frank Act in 2009 and 2010, as head of our industry trade association, I wound up in front of Congress multiple times explaining the market, how the market worked, and was really fascinated by calculations that the Fed and Treasury were doing that a failure of Lehman Brothers back in 2008 would have triggered about 400 billion of defaults under outstanding credit default swaps. And basically, the Fed extrapolated if a failure of Lehman Brothers would trigger 400 billion of credit swaps failure, then a failure of, say, a Morgan Stanley might be 800 billion, or a failure of JP Morgan 1.2. And that really was the basis for the TARP program, was to load these banks up with taxpayer money to withstand a run on the bank in the same way that a fire brigade might wet down all the houses in the neighborhood to prevent catching fire from the one that was in flames. But it struck me that couldn't be the right number. If that was the outstanding amount, I knew that these banks, because of our work in the market, were hedging their positions. And I just jump ahead a little bit. Later on, when I was at the CFTC, we did some analysis, and others, some academics, including Bruce Tuckman at NYU, calculated that the net exposure of a Lehman Brothers failure was less than 9 billion. Well, if we knew in 2008 that a failure of Lehman Brothers would have triggered only 9 billion, then policy choices could have been much different. Obviously, one could have been let them fail. It wouldn't have brought down Wall Street. Another one could have bailed them out. The Fed could have bailed them out, or private investors could have bailed them out much better. But it wouldn't have brought down the house. But we didn't know that. Now, had we had all those exposures on a blockchain, we would have known that. And so in 2013, I was contacted by the Obama administration as someone who actually supported the Dodd-Frank provisions known as Title VII, which were the swaps provisions, but felt they were being misimplemented by then CFTC Chairman Gary Gensler. The Obama administration invited me to join the CFTC as a Republican commissioner to help implement the act, because I was one of very few Republicans that actually supported Dodd-Frank, or at least that portion of it. Now, I took my seat in 2014 following Senate confirmation as a minority commissioner, and was delighted to get a call in the winter of 2016-27 from Gary Cohn, who was then going to take on the mantle as NEC director under President Trump, asking me if I would like to serve as chairman of the agency. And He put forward my name. I was nominated in March of 2017. I was unanimously confirmed by the Senate that summer and served as chairman of the CFTC from January 2017 until the end of my 5-year term in the summer of 2019. Since stepping down as chairman of the CFTC, I've published a book, Crypto Dad, about my experience in greenlighting Bitcoin futures, which we'll talk about. And I'm affiliated with the law firm of Wilkie Farr and Gallagher, where I serve as senior counsel and head of the firm's digital asset practice, really become, in a short period of time, one of the leading digital asset practices in the world. And I'm also on a number of boards. I serve on the board of Nomura Securities, the parent company in Japan, Digital Assets, the private company here in the US, and one or two other boards and others that I'll be announcing in the future. And then I launched something called the Digital Dollar Foundation with family money. And now we've widened that out to launch the Digital Dollar Project. And we advocate that the US take leadership role in the developing global standards for central bank digital currency. We do not advocate that the U.S. launch a digital dollar. We don't know what that means at this stage. We certainly don't want the U.S. to launch something that looks like China's digital yuan, but we don't necessarily think any democracy should launch something like that. But we do think democracies will launch CBDC. It's inevitable. And the question is, what about the values that democracy stands for? Because they are transmitted through currency, and how best to protect the dollar, its future-proof it, and its reserve currency status and the values in which it stands in a future where value will increasingly move on digital systems of value, some of which will be decentralized, but others will be centralized. It will be enormous honeypots for information and subject to government pressure for surveillance and censorship. And how do we protect U.S. values in that future? So, lots of fun things to talk about. That's my background, and looking forward to our conversation today.
Yeah, and actually, I was taking a whole bunch of notes down furiously as you're talking, so I think there's a lot of different directions we can go. I am curious, before we get into the crypto side more deeply, just given your experience on the regulatory front, is it true from your experience that, every crisis creates a whole new set of regulations, but those set of regulations don't necessarily change market dynamics or the way markets behave? What I'm trying to get to is the issue of, do regulations cut off tail risk from prior old wars, in quotes, being fought versus new dynamics that come up that regulators then have to respond to with a lag, and usually when it's too late?
Yeah, that's a great question. There was about 5 or 6 years ago, a private, I don't know if it was a trade association or think tank in the UK. I can't remember the name of it or what they did, but I remember their paper. What they did was they did historical analysis of financial crime in the city of London, going back to the late 1700s to date. And they looked at every major scandal in financial markets, and they compared and contrasted them. And when they were done, they came up with, I think the number was 16 basic crimes that all of the scandals in the city of London over that, 250-year period would fall into one of the 16 categories. And notwithstanding, the movement of markets from, stagecoach riders to steamships, to trains, to telegraph and telephone, and computers, and, all the technological evolution that took place in human communications and information during those periods, it's the same crimes, it's the same scandals over and over again. And I think, you can take that study forward and take it backward. I think we probably would always conclude the same thing, whether it's market manipulation or cornering a market or monopolistic in things or Ponzi schemes. Criminality will always use the next technology to achieve, in many cases, somewhat of the same ends. And whenever you have value, you have people with different stages of sophistication or caution about hanging on to their value. And you have, manipulators and fraudsters come along and use new means. And in many ways, the FTX scandal is one as old as time, a new technology and people that exploited people's excitement about that technology and operating outside of standard rules. And so, but I'll bet what I would have loved to see in that study is add to it, what was the response after every one of those major scandals? I'll bet, well, I don't have the work of a study to show, that each one of them followed with some sort of, movement toward, we need new rules, we need new regulations, we need new ways to stop this from ever happening again. And it never stops it from happening again. Now, that's not to say that I'm skeptical of regulation. I do believe that core principles of regulation, like what we did at the CFTC, separating the client's money when they put it up to an execution venue from the people running the executions venues' ability to get their hands on it. There's some core elements like that need to be put in place in market. I'm a big believer in sound, sensible regulation and work very hard to try to do that at the CFTC. I'm very proud of the fact that the one piece of the FTX empire that didn't fail is the piece that's under CFTC supervision. And a lot of that was done during my term there. So, I'm not at all a doubter of smart regulation, but you can also have misregulation. I always push back by the idea regulation can be measured quantitatively. You hear people say there's too much regulation, or then critics will say we didn't regulate this enough, as if there's some sort of magical quantity level that's the right quantity. It's not about quantity of regulation, it's about quality. Is the regulation fit for purpose? Does it achieve the public policy aims? If it does, it's not a matter of how much or how little. It's a matter of, did you get it right? Did you get it to fit the problem? I wonder whether in history, many of those incidents reported in that study were followed by, a rush to create all kinds of regulations, some of which, were effective and some of which were not. And probably in many cases, it just was an emotional reaction as opposed to a well thought out, principle based standard operating procedures that you need in any good, well functioning market.
What about sort of the idea that we're in an era where regulators, and this may be too broad of a statement, are unable to keep up from a speed perspective, right? Because I think this is where it also gets to be interesting. It seems like more and more of these, crimes end up happening faster and they end up being bigger, right? I mean, case of SBF, he's bigger than Madoff, but obviously Madoff went on for a long time, right? And kind of undetected largely. How are regulators responding to the technological advancement that others are able to kind of use more freely, whereas, there's a lot more red tape?
Well, I would say that just as at least that study was able to put criminality, and I'm not sure whether it was 16 or 18, but whatever it was, it would put, 215 years of market scandal into 16 or 18 categories. You probably could take failure of market discipline, market regulation, market supervision into probably 16 or 18 different categories. One is that the bad guys got hold of a new technology faster than the good guys were able to get their head around it, accommodate it. And sometimes the failure they get their head around and accommodate is simply laziness or sleep at the switch or people that are not up to the task in the job. Sometimes though, and I think this is where perhaps we're entering a new age, it's generational. The technology is evolving so fast that when you have a generation of leadership as we do today, and it's not just in financial services, it's pretty much across the board, and it's across the board in both parties. You have a generation that the very people that are running these agencies are the same people that if they've got to download a new app on their smartphone, if they have a smartphone and not a flip phone, they're calling their grandkids to say, how do I do this? And yet we're expecting them to understand a new, network-based architecture of finance. We're expecting them to be up to the task of AI. We're expecting them to be up to the coming task of quantum computing. I mean, generationally, they just don't have, they didn't grow up in a network world, and they're just really struggling with it. So I think that certainly, we probably have come to a time where we need a new generation of leadership in many roles simply because the generation that's there can't keep up with the technology. I think we are somehow living in a time where we have a particularly septuagenarian set of leaders. And I say this somebody in my mid-60s, and I also acknowledge my own struggle to keep pace, which I work hard to do. I think there's some folks at the helm of institutions that like the world, of an analog financial system, non-networked, in their minds. During that period of time, the dollar rose to prominence, American banks rose to prominence, American regulatory systems rose to prominence. And, in their minds, maybe there's no need to change. Well, technology has a different answer for that, and it's going to do it whether they like it or not. but I think we may be faced with some generational issues this time around. Well, I don't have any insight into the building, and probably as a good former regulator, if I did have particulars, I would be discreet in sharing them, but I don't. Let me speak about it more objectively. The CFTC, within its jurisdiction during my term, greenlighted the launch of Bitcoin futures. Whenever the CFTC approves a futures product, that product has to demonstrate that the futures product, as opposed to the underlying spot market, is not susceptible to manipulation. And the longstanding 150-year-old exchanges like Chicago Mercantile and CBOE and others had a lot of secret sauce in how they design a future product, so that even if the underlying market might be susceptible to manipulation, the future is not. So, for example, the Bitcoin futures price, settlement price, is not simply taken at like an end of a closing period, and they use that subject so that, in a way that people could manipulate the closing price through techniques called bang the close and others. They actually use a random set of 6-minute increments during the trading day and then aggregate them using a secret sauce that nobody can reverse engineer and therefore manipulate the future, even though it very well may be possible that large traders might be able to manipulate the underlying spot. So the SEC, in approving an ETF, when it approved the ETF on the future, it pointed to the fact that the CFTC regulates the future, and Gary Gensler, used to chair the CFTC, understands how the CFTC looks at the futures house's secret sauce in calculating that closing price and other elements to assure that it's not susceptible to manipulation. I understand one of the reluctance of the SEC to approve an ETF on the spot market is that because the spot market in Bitcoin, spot market ETH, are not regulated. The CFTC does not have regulatory jurisdiction over spot markets. It has enforcement, but not, in other words, if they know of manipulation, they can enforce it, but they don't have the ability to put like exchange rules or how that market is operated on it. So the SEC's justification is, look, we don't have a regulated underlying spot market. Therefore, we can't be sure that market's not manipulated. And there is neither of us, the CFTC or us, have jurisdiction over that spot market. And so the colorable argument is it's hard to approve an ETF because they can't get comfortable as to the market order, market discipline, market structure in the underlying spot. I'm not going to, for purposes of this conversation, challenge that decision by the SEC, positive or negative. What I am going to say is that's all the more reason why Congress needs to give the CFTC jurisdiction over the digital commodity, which would be Bitcoin and ETH and perhaps others, spot market, so that the CFTC can impose its standard order and structuring rules on the exchanges in that space, or the platforms. They would then become exchanges licensed in that space. If it were to do that, we now have the trifecta of trading instruments necessary for a really healthy Bitcoin and Ethereum market. What do I mean by that? Well, you'd have what we have today, which is regulated futures under CFTC. You'd have what we have today, ETF, SEC regulated ETFs on that Bitcoin futures market. You'd have now a regulated spot market with the, I think, sensible regulation the CFTC brings to its marketplaces. And you'd no longer have a reason for the SEC not to approve an ETF on the spot market. So I said a trifecta. You'd have a quadfecta. You'd have 4 key regulated instruments. And, for traders, that's nirvana, because they could look at arbitrage opportunities and different trading techniques using those 4 different instruments. So I testified in support of this. I submitted a written statement to the Senate Ag Committee on this. We really need to get the CFTC that authority over spot Bitcoin and ETH. And I think that would take away hesitation from the SEC to approve that ETF. And I think this would be really good for trading and really good for markets. The one thing I'd say there, though, is somehow the Canadians, the Germans, I think the Singaporeans, I think Hong Kong have all found a way to create a healthy, functioning, regulated spot Bitcoin ETF market. Now, I haven't studied that regulatory process, but in the absence of the CFTC getting spot authority for all the reasons I said and what it might lead to, I would like to see some analysis of why they were able to do that. And if there's a good basis they were able to get comfortable to it, then there may be other avenues to the SEC to do the same thing without waiting for Congress to get this done.
Just to reset the room for the remaining minutes, everybody please make sure you follow Chris here on X. If any of you want to come up and ask questions, click that bottom left mic request button. And as always, this will be in a podcast under Lead Lag Live on Apple, YouTube, and Spotify.
I'll just sort of use a shorthand like I call it the analog world, but let's just say in the pre-internet world of the 20th century, we became very comfortable in our free society and free enterprise marketplace that you had instruments like sovereign currency. And in the United States, after the 1970s, completely fiat, untethered to gold, that operated alongside gold in the marketplace. And they serve different functions because the supply of gold is at any given time is limited. You can't artificially increase it or decrease it. And therefore it serves as a store of value. And you also have sovereign currency, which historically the United States hasn't been terribly profligate with, but that seems to be changing. And money printing seems to be something we can't refrain from. And so they serve different purposes. In a digital future where value will increasingly move from where we've recorded it up to now, which is on the balance sheets, the proprietary balance sheets of commercial institutions like banks and asset managers, to recording value on distributed ledgers, some of which are decentralized like Bitcoin and other which are centralized like stable coins or central bank digital currencies. At least my expectation is that you will have, just as you have in the past, many different forms of value recording. So again, in that analog past, you can keep your money under your mattress in cash. You can put your money into classic cars or artworks. You can store your value in prepaid American Express cards or store cards. You can keep your value in the bank. You can keep your money in cash. I hope that in the free society of the future, there's as much choice as there was in the past. I hope we don't live in a society where government rolls out a CBDC and says that is your only form of payment. I hope, or storage of value, I hope it's as multiplicitous as it has been in the past, where you can store value in NFTs, the equivalent of art or classic cars. You can store value in property that may be in the form of a digital token. You can store value in stable coins. And ultimately, I think free societies need to develop or will develop. Ultimately, I think free societies will develop central bank digital currencies. The real question is whether they will develop them, what values they will encode in them. Already, we have allowed the dollar to not be as free from government censorship and surveillance as our Constitution would otherwise have us expect. As we go to digital money, I think we, the people, need to speak up and make sure that the model for a US digital dollar or a digital pound or a digital euro is not the digital yuan, which has surveillance and censorship features built in. But in fact, we need to insist upon digital money. And this is whether the government runs it or it's run by big tech companies like stablecoin owners. Quite frankly, there is no difference between a government's ability to censor and surveil activities in a stablecoin than there is in a digital dollar. In the same way that government has not refrained from telling Facebook and YouTube what can be hosted, what can't be, what conversations can be had, and what conversations can't be had, whether it's the origins of COVID or the usefulness of masking or stay-at-home requirements, or all of those topics were censored, we now know, from court action in the Fifth Circuit. And so the real question is, what about money? And I think whenever you've got centralized systems of money, whether they're stable coins or government, the question is going to be, what about those values that we hold dear as a free society? And I think there's no technological reason why stablecoins or central bank digital currencies could not be designed using zero knowledge proofs and others so that people can maintain their anonymity in their transactions. And yet at the same time, the government can use modern techniques of big data analysis and pattern recognition to analyze activity, to develop areas of probable cause of law breaking, and then unmask participants. First interdict that activity, and then unmask participants to prosecute that activity. So rather than having the system we have now where banks and others turn over massive reams of data to the government in case people are doing things wrong, we can get back to the basics of our constitutional system that people have a right to economic privacy unless there's probable cause that they are doing something, in which case we balance that with law enforcement needs that you have in any civilized society. So I'm actually optimistic of digital systems, digital networks of value. And I believe that any one of those that are dollar-based, whether they be stable coins or ultimately a U.S. government-backed digital currency, have to be consistent with the Constitution in a way that our current analog system seems to have lost its way. And I'll say this, again, if the past is a prelude to the future, in our current system, about 90% of money is basically bank money and only about 10% is cash. And the amount of cash does not interfere with the amount that's bank money. It doesn't undermine the role of banks in maturity transformation, doesn't undermine the role of banks in money transfer. It actually makes it possible. People would be reluctant to put their money in banks if they couldn't, in a crisis, run down to the ATM and take it out in cash. And you have to ask the question, will people really be comfortable in putting in their money in dollar-based stable coins if there's a risk that a stable coin operator could be a run on the stable coin and their only option is to transfer it into other digital currency or maybe a digital euro, a digital pound, but not a digital dollar because one doesn't exist. So I think they're all complementary. I think we as a free people should want as much choice as possible. And anybody that wants to limit our choice, I think is missing the point. The question is not about limiting choice. The question should be, how do we make sure that the values we hold dear, what are those values in a free society? Well, that is, free enterprise, it's open markets, it's open access, it's financial inclusion, and it's economic liberty. It's the ability to operate. If you're operating a lawful transaction, you should be able to engage anonymously, both vis-a-vis your government and a big tech company. And by the way, we're not as concerned as we need to be about big tech. Maybe not turning over our data to the government, but turning it over to merchants and others. I mean, how's that data going to be commercialized when big tech are doing this? So we need as much choice as possible so that we can reward those who properly handle our data. But we also need to make sure that the values of First Amendment, freedom of speech, freedom of assembly, and the Fourth Amendment, freedom of privacy in our own home with our own effects. By the way, what are freedoms of speech, freedom of privacy, but how, in a capitalist economy, but how we spend money, right? Freedom of speech is, what publications do we read? Freedom of speech, what organizations do we belong to? Freedom of assembly. Those are all expressed in dues and subscriptions. And if the government can have access to that, what candidates do we support? The government can have access to, or big tech companies can have access to that. It's the same violation of the Constitution. So we need to get the values right in a digital future money and have as much choice as possible. And there's no reason why we should just assume that the Chinese model of surveillance and censorship is going to be inherent to any form. I mean, saying that is kind of like a disservice to a free society. I mean, we shouldn't accept that for a minute. And why would we? And we've got certainly the engineering talent to engineer a digital dollar or stable coins that protect our privacy. And we should insist that any and all of them do exactly that.
The issue that I can see, though, is that the starting point of all that is from a place of general distrust towards the government, I think, broadly. Like I've used that line before that people would rather, we're giving up we're favoring terms of service instead of a Bill of Rights, right? More and more, to your point, people are giving up their rights to companies. And I don't know if there's more trust in the government as opposed to more trust in Meta, but both are probably pretty weak. So I guess where I'm going with this is, how do we get to a place where...
but at least the government is actually governed by a constitution that restricts their ability to invade privacy. I mean, Look, if we hand it all to big tech, government's going to love a government that wants to surveil us is going to be clapping because big tech has the argument they're not subject to these rules. So government can lean on them and say, hey, nice stablecoin license you got there. Be shame if you lost it if you allow people to buy ammunition. Be shame if you lost it if you allow them to fund Planned Parenthood. Shame if you lost it if you allowed people to fund Right to Life. The government can do that because it's not governed by, because those companies are not governed by the Constitution. I would argue you may be safer with a CBDC because at least you can go into court and say, hey, they violated my right to privacy. They can't do that. They violated my right to free speech. They can't do that. But with a stablecoin operator, look what's happened. I mean, when the government sued Missouri versus the United States in this recent court case, and they lost at the trial court, now they've lost at the Court of Appeals. Government went and argued that they have the right to pressure social media companies as to what to say. The Biden administration argued they're free to do that. So you're telling me they're not going to assume the same freedom to do that with stablecoin operators? And by the way, I don't mean any disrespect to Circle or PayPal. I support those innovations. I think they're very important, but I'm warning people that don't assume because it's done by the private sector that you're not going to be government surveilled or censored. Don't assume that. At least if the government's doing it, there's a constitution you can argue is in your favor. The government is arguing that the Constitution does not prevent them from leaning on these private sector actors to censor the speech.
I think that's a good transition to the digital dollar project itself. So maybe talk about that founding and what is it exactly that you're trying to accomplish with it.
Sure. So we really have one core mission, the Digital Dollar Project. So let me back up. So I launched a Digital Dollar Project after I stepped down from the CFTC because I could see the direction of travel. And over 130 countries right now are experimenting with CBDC, and that 50 of them are in advanced stages of development. 19 of the G20. Europe has said they'll have a digital euro by the end of the decade. Britain is working on a digital pound, and the Chinese have already put their digital yuan into 260 million wallets, and they have banned competition from crypto. So CBDC is coming. So is stablecoins are coming as well. The Americans cannot say, well, we don't want CBDC because they're going to be dealing with it, whether it's a digital pound or a digital euro, and our corporations are going to be dealing with it. So it's coming whether we like it or not. We launched the Digital Dollar Project. It's a nonprofit, nonpartisan organization. It takes no taxpayer money, nor do we seek any, entirely self-funded. We launched it to ask really one simple question, and that is, how do you future-proof the U.S. dollar in a coming world of digital networks? How do you protect its reserve currency status, which I believe has been not only good for the United States, I believe it's been a net good for the world. We can talk more about that, why I believe that later. And how do we preserve and enhance the values that we believe the dollar stands for? Free enterprise, economic privacy, economic liberty. How do we do those things in a world that's increasingly moving to systems of value that are both decentralized and in some cases highly centralized by other governments and by big tech companies in the United States? That's the simple question we ask. We do not call for the deployment of a U.S. central bank digital currency because we don't yet know what that means or looks like. But we believe it's entirely possible, and we put forward what we call a champion model in a white paper. It's entirely possible to design a U.S. central bank digital currency that is in keeping with the Constitution, is privacy protecting, and in fact, privacy, and in fact, better than what we have now, where there's enormous amounts of anti-constitutional or extra constitutional violation of privacy in our economic activity. There's this assumption that cash is private, digital systems are not. I mean, cash hasn't been private for a long time. It's getting less private all the time. So that's the question we ask. We're focused on projecting the dollar forward into this coming world of digital networks. And we call it the Digital Dollar Project, really asking the question, what of the dollar in new digital systems of value?
Do you get a sense, again, another kind of broad statement, do you get a sense that Democrats would be kind of more forward thinking in terms of digital assets, digital dollar, blockchain implementation on the government level versus Republicans? Or is there sort of a common sort of dynamic of neither is really pushing too hard?
Well, there is just an odd and very rough calculus that sort of further right you go on the political spectrum in the U.S., the greater affinity for private sector approaches to digital systems of value and antipathy toward any type of government run systems of value. And the further left you go, it's the reverse. And you've got Elizabeth Warren and her anti-crypto army, but a lot of people in her caucus are very open to developing a central bank digital currency. I find that very unfortunate as someone who has been a free market proponent all my life, fought for privacy rights during my time at the CFTC and won in a number of cases against Obama administration policies that would allow them to seize financial information without a warrant. But I'm also a big believer in American power of innovation. If we could, build the first wave of the internet and dominate the way we did, there's no reason why our engineering talent can't design digital systems of value that protect privacy and are censorship resistant. And so I don't buy the argument from either side. I certainly don't buy the argument from some Republicans that it's impossible to create a digital dollar that's censorship resistant. Why not? It should not only be engineeringly possible, it should be legally required and subject to the Constitution. So we can do that. But the same requirement that requires a dollar to be censorship resistant should also require that stablecoins be censorship resistant. And my disappointment in the current stablecoin legislation is the lack of attention to privacy. There's virtually nothing in it that says stablecoin operators need to protect your privacy, whether they take it for their own purposes to sell you advertising or sell it to merchants, or whether they give it to government under pressure for, to renew their license. So I think the issue of privacy transcends left and right. I think that the issue of privacy transcends. I think the whole argument over, stablecoins versus CBDC is kind of moot and kind of shallow. The issue is really, do we create a counter to China? China has created the benchmark. You can't deny it. They've created a benchmark for what a CBDC can be, and we should want no part of that. But the answer can't be, therefore, do nothing. Sometimes the critics of CBDC remind me of the critics of nuclear power in the 1970s that say, oh, this nuclear power is so dangerous, we just can't have it. Just say no. And we allowed our economic competitors like France to perfect it and operate it and become less dependent on one source of energy, oil, than we did. We should have dominated that technology. We should have perfected, as we did in our submarines and our aircraft carriers, we should have perfected it and dominated it instead of just say no. And I think this just say no to CBDC, it lacks imagination. It lacks thoughtfulness. The real issue is, again, back to our core element for the Digital Dollar Project. How do we future-proof the dollar in this coming world of digital networks? And how do we do so that preserves our values, enhances our values, improves upon our current system and this digital future? And that's what I think we ought to all bend our attention to and get it right and have both stablecoins and a well-functioning CBDC in this digital future. If we're going to protect the dollar, one of the things we should be doing is we should be making sure there's as much choice as possible in dollar-based systems of value as possible. And all of them should be privacy protecting and censorship resistant. And if we do that, we will win this arms race, this new space race to create digital networks of value. And the future is going to be one where you're going to have competing networks, some of which are going to be government run. You're going to have a digital yuan zone. And that digital yuan zone, believe me, is not going to remain confined to the Pacific. It would not at all surprise me in 10 years to see a digital bolivar in the Western Hemisphere, which is a white label version of the digital yuan. And other countries on China's Belt and Road or client states that have tried to build their port facilities and water treatment plants will be required to make their service payments in digital yuan directly to the People's Bank of China. And they may find it easier, and they may want the social surveillance and censorship technology that's written into that digital yuan, and they may get it with a white label version of it. Look, a third of the globe is under closed societies and tyrannical governments that would prefer that technology, would want it, would white label. So you're going to have a future where you're going to have digital yuan-based systems of value operating around the globe. The Europeans absolutely see the digital euro as an opportunity to gain market share from the dollar. and are going to promulgate that and promote that as well as they can as a basis for access to the common market and their 330 million consumers. And here at the U.S., we're arguing over, let's limit choice. We ought to be promoting as many systems of value as possible that are dollar-based, and that includes stable coins. But the real selling feature, if we get it right, will be building freedom in. In other words, let's look at the issue of privacy, not just in the negative, but in the positive. In other words, let's affirmatively make any dollar-based digital system required to protect privacy. And if we do, people will flock to it. Free people around the world will flee those closed systems and will flock to dollar-based systems because we've affirmatively required privacy and anti-censorship and anti-commercialization by big tech companies and anti-censorship by big tech companies as a requirement for having the dollar as your underlying basis. I'm glad Michael gave me an opportunity to mention my background. I had the good fortune of having built a company and taken it public in a very successful IPO in a very good time in the recent history. And so I had the luxury of having made some money. I didn't need to serve in Washington, but when I was called to serve, I was proud to do so. But having left government, I'm now in this place where, I don't mean to be immodest, but I don't need to work. What I want to do is do important work. And we at the Digital Dollar Project had no commercial expectation whatsoever. So unlike a lot of the voices in this space, we're not pushing a commercial agenda. We've got no product to sell or approach to take. I'm convinced that this movement from analog system values and digital systems value is both a huge opportunity for the United States to get right or get wrong. If we get it wrong, if all we do is something that's China light, well, whether I'm surveilled and censored by big tech or surveilled and censored by the government, it almost makes no difference. But if we get it right, imagine this. I mean, it will have gone from a world where the dollar is king because of the value it represents, the value of the strength of the U.S. economy, to a world where the dollar is king because of the values it represents. Imagine that. Imagine if we build into the dollar our core constitutional principles, right to freedom of speech, right of economic activity, and we do so in a way that's not incompatible with law enforcement, where government can use, and somebody asked about this earlier, the solution is big data systems. Government can surveil activity as opposed to actors, as opposed to entities, and look for patterns. So if we get the issue of privacy right, people will flock to the dollar for 3 more generations. And even if China surpasses us in economic might and power, it'll be the values the dollar represents that will give it its strength. So I see this as it's a huge opportunity. And we've been allowing way too much inappropriate government activity to take place. This is an opportunity for kind of we, the people, to reassert ourselves. And one of the reasons why I'm so bullish on stablecoin innovation development, because that's what we do well. The private sector is leading the way. I'd like to see our stablecoin operators do even more on the issue of privacy, assure us that they're not going to be subject to government pressure. But I do think we need to see Congress step up and make sure, as I said before, that anything written on the dollar, we got to see this as an opportunity. Anything written on the dollar, anything based on the dollar in a digital world has got to protect privacy. It's got to be censorship resistant. And if we do it, it's going to be a huge opportunity for the U.S. And, look, I said this before, but I'll repeat. I think the dollar has been a net good. Of course, it's been a good for the United States. The French call it the exorbitant privilege that the Americans enjoy because the world uses the dollar as a reserve currency. But I would take a different argument, and that is the last 30 years of globalization, in which more people have come out of poverty on this planet Earth than at any other time in human history, would not have been possible without the dollar as the world's reserve currency. Without people in the world having a reliable store of value and a reliable unit of account to utilize in pricing global transactions and transacting globally. And that globalization led to the rising wealth in a lot of the underdeveloped South that allowed more people to rise into the middle class and become educated and engage in this global effort. That was, I think, largely, the dollar played a key role in that. So I think it's worth preserving that aspect of the dollar. I think the way we do it is by focusing on the values of this digital dollar of the future.
Chris, for those who want to get access to more of your thoughts or work, where would you point them to?
Sure. So I'm at Twitter at Giancarlo Markets, NKTS, Giancarlo NKTS. I'm on LinkedIn. Reach out to me on LinkedIn. Love to communicate with folks. It's a topic that absolutely fascinates me. I'm going to remain focused on it as long as I'm in public light. And I really thank you, Michael, for this opportunity to talk about some of these issues with your audience. I've just been scrolling through. There's a lot of folks on here today. So thank you all for listening in.
Appreciate everybody that joined. And thank you, Chris, for your time. Really do appreciate your knowledge, your experience, and everything you've done for society and community in general. So thank you, Chris.
Thanks, everybody.